Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. It would be disconnected as soon as you started the meeting. Finally mixed on my desktop, but not my laptop. I have not seen issue with GoToMeeting disconnect. Has anyone experienced GoToMeeting issues where it would be disconnected once I start the meeting? I don't know if you see any issues with GoToMeeting. Phil, good morning. Mark, good morning. Have not. Okay. So Bill, I'm not sure. Bill, hi Dan. It may be isolated, but so far nobody else reported. I mean, there has been issues with GoToMeeting. Usually it affects me too, but for now, I think it doesn't affect anyone. All right, so it's 8:16. You guys can hear me. Let's review. Okay, let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, trading my own money and managing my own money. I've been doing it for over 15 years, mentoring and teaching subscribers how to trade stock and options. Disclosure important, please read them. Trading stock and options involve risk, not suitable for everyone. If you're new to trading stock and options, I encourage you to visit the link on your screen, optionscreen.com, to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. And again, you can pause the screen if you need more time to read the disclosures. All right, we talked about trading psychology at length. Again, very important right now, it's all about risk management. It's all about risk management, spiders. Basically, retesting 400, we had a pretty strong rally yesterday. Market is overbought. We did break above last week high. As long as we're above last week high, I think the chance of retesting the lows, I mean, still there, but I think it's dramatically decreased. But still, I think there'll be a pullback. There could be a pullback after the FOMC decision today, but looks like 390 is a strong support and probably will hold. Expect more volatility. All right. We do have rising yield, 2-year yield up, 10-year yield up. We have some inflation data from Britain. Inflation data from Britain came worse than expected. Lagarde, ECB chair, Fed chair, kind of, or equivalent of Fed, came out and said that inflation is here to stay. It's there's no evidence of inflation slowing down in the Eurozone, right? After 2 months in a row, January and February, worse than expected inflation. So despite the Credit Suisse bailout, at least ECB is on course to continue raising rates. And still kind of financial instability in regional banks. PACW, I think last time I checked, was down significantly. Again, was the idea that they need to raise more money. They did raise more money, I think $1.5 billion. So the idea that I think there was 20% outflow of all the deposits, not to raise after getting private backer, not to raise additional capital after private backer. So a lot of drama, right? Not a lot of drama, but uncertainty. Drama is not the right word. Uncertainty, instability, still outflows in cash deposits, and you can see some of the regional banks, and I think First Republic Group is kind of in sympathy. Same thing, kind of. Well, it's actually slightly down, so it's a little bit more stable. Okay, in terms of earnings. I did Nike. Nike is down, was down. It was up and down, kind of fluctuating, but down 2%. GameStop, that's been a positive surprise. It's up 50%, right? 50%. So if you did sell 24 strike, I basically said that if you do, first of all, it's a meme stock and could be volatile. Obviously, it had better than expected earnings. It's up 50%, but again. After initial announcement, even if you sold 24 strike, you had plenty of time to hedge, right, by buying the stock. So if you did buy a stock at 24, then you basically, slightly down or broke even. If you don't, then obviously this is very volatile stock. And this is an example where selling out of the money premium sounds like a great idea, but there's always exception, right? There's always outliers. So if you do have these outliers, more often than not, there's continuation. So it makes sense to get into a cover call, right? So if you're in a cover call, then you're okay. If not, then that's an issue. So that's GameStop. Again, good case study, right? If you are selling premium, that's very, very popular strategy. Doesn't matter if you do a meme stock or index or ET or regular stock that doesn't have 50% move, but it's the same structure, right? You just on GameStop, you buy less shares, right? Because it moves 50%. If you do Nike, then and Nike can move 10% and GameStop can move 40%, then it should be a ratio of 1 to 4, right? In terms of quantity. So always look at the beta, always look at the historical moves to understand the size, right? It's all about position size. And this is just one way to hedge your portfolio trade. Nike, we'll put in order. Let's put in order to close the position. Ideally prior to earnings, you want to close the put. Because after the announcement, right, which is 2 p.m. Eastern, the volatility will pick up, right? The volatility will pick up. So it's important to close your positions prior to announcement. we have time, but I would not hold at the money options or near the money options going into the FOMC meeting. All right, let me know if you have any questions. So GameStop, I'm watching the GameStop. All right, any questions? Desi here, welcome. In terms of JP Morgan and financial, again, one of the key takeaways, it's actually, I mean, still down, did rebound. One key takeaway that, you know, I was listening to the news, which I agree, is that it's going to take a few months to market to find some kind of stability, right? Because this headline news is going to continue, whether it's inflation from Britain worse than expected, Lagarde raising rates, you know, we'll see what Jerome Powell will do today. So, and, you know, regional banks are, and then they were saying private equity stress test to reveal $80 billion in potential write-downs amongst the banks, right? So not a large number, you know, market's kind of ignoring this, but the point is it's going to take a few months. So it's going to take a few months. What does it mean? That, you know, probably bull market is not going to resume in the next few months, and you can expect more downside pressure in a few months. You know, is the market going to collapse in, you know, in 1 week or months? Probably not. Is it going to rally? Probably not. So it's going to be this up and down action for, you know, some time, right? Sometime. And I gave an example, right? In 2008, it was very similar setup, right? Not forget the magnitude. I'm not talking about magnitude, but the timing to resolve these issues, right? So again, it started in March, right? It started in March of 2008, Bear Stearns collapse. We had a strong rally in spiders, right? Then pulled back into the summer, and then until the next catalyst, right? And it took up until April or March. It took until March to find the bottom in the market. It could be the same setup, right? It could be the same setup. Maybe not March. Maybe it's by December. Maybe it's by June of next year. That is just determined, you know, we just have to wait and see. A lot of, you know, right now, it's not 2008 thing. With social media, things get done a lot faster. One of the reasons of this run on banks is social media. That's very easy to spread the word. But the point is, you have to be patient. It's gonna take time, and you should not be surprised if the market gets to, I don't know, 420, 440, right? That's possible, right? Unlikely, but possible. I mean, or it can drop to 350, you know. I think, you know, it's going to take time to drop to 350, maybe May, June, but it could happen in the next couple of weeks. It all depends on these events, right? And when they unfold, right? So that's the main takeaway. It's patience. I will hold XLF, Todd, yes. So XLF, I'm bearish. So I think, again, you know, this is a pretty steep sell-off. It's sitting on September lows, right? XLF. You know, I doubt we're going to revisit 36 level. I think we're going to post lower highs. We're going to post lower highs across all the asset class, not all, but most of the asset classes. Maybe technology maybe technology we can get a little bit higher, right? We're already at, February high. Maybe we'll reach, August high, like we did in 2008. So that can happen. But banks, with all the uncertainty, I just cannot see banks posting new highs. So lower high, lower low, right? So it's just something to keep in mind. All right, let me look at the GameStop. I do have so now I have a cover call. I need to get rid of it. So bear with me. So first, I want to get rid of the call. Okay. Give me a second. All right, let me just go over the questions. Bob present. Welcome back, Bob. All right. Meanwhile, let's see. While we're watching GameStop, let's see. Oh, Nike. So let's go through the Nike trade. So I did trim QQQ call spread, right? I think market is overbought and due for a pullback, maybe after the FOMC decision, 385. Also, put an order to close the April call spread. At this point, we are in March, so we're approaching April. The goal is to close all the April positions. I think the only one I have is QQQ. Nike. All right. So. We see Nike trade. So I do have 141 call and I have 108 put. So I don't counter, right? So I sold the call spread, sold the put spread. Let's look at Nike. So GameStop, I'm out, right? It's dropping. I close the calls, close the put stock. I mean, so it was a loss, but small loss, right? Maybe $1. Could have been a lot worse if I held on. So, all right, so I'm out of GameStop. Nike is down 2%. So first, let's close the call. All right, so let's see. Okay, so put, I can close for 4 cents. So I'm going to close the put for 4 cents. 3 cents. That's the first thing. Okay, so I'm out of the put. So I close the put. And now I'm closing the call. Call is 1 cent, so just freeing up buying power. Okay, so I'm out of Nike. It doesn't make sense to hold it into the Fed decision. Okay. Because market is going to be volatile. So at the money options or near the money, I mean, this is out of the money, but still, it's not worth taking the risk, right? So I'm out of the put, especially after the put, because it's down 2%. It could accelerate after the FOMC meeting. And out of the call. So again, the goal is to collect 0.5%, right? I sold 141 call for 45 cents, and I sold 108 put for 40 cents. So I collected 85 cents, so 80 cents, minus hedges. So it's about 0.5%, maybe 60 basis points. Bob, Delta Airline credit. 1 month, I mean, you can trade anything, right? You can trade anything. If you buy, I think you're trading against the current, right? Trading against the current. Much better to short Delta Airline, but I do agree that if you do want to trade it, you have a well-defined stop level, right? You could have this ABC, right? So I think core scenario, we do rally, right? We do rally, and then a pullback. I mean, whether you buy on QQQ or Delta Airline or Microsoft, I think patterns will be similar, right? The question is, right, this is A, right? Looks like B started, and then we're going to have C. That's what I think is going to happen. And the question is how far B wave will go, right? I think the right strategy right now is sell into rallies, not buy into pullbacks, right? But again, I know you switch to soft landing. So if you're in a soft landing, then this is the right strategy, right? If you believe that we can avoid the recession and financial instability is going to get resolved sooner than later, then yes, this is the trade, right? If you believe in soft landing and you're in that camp, you buy in pullbacks, right? You buy in pullbacks, you find a bottoming process, and then you are trying to, catch the rally in 1 month. If you're in a bear camp, I would wait for the beat to happen, right? And then sell, right? And then sell the stock, right? Because this could be a very brief, right? It could be 50%, it could be 20, 30% rebound, retracement. We just don't know. I doubt it's going to be 100%, but it's possible. I do agree it's possible to get to 50% retracement. So if this is a trade structure, I think risk versus reward. maybe you have a little bit of room to the upside, right? Because your downside risk is probably 32, right? Year-to-date low. I would not hold this position if we break below. So you have probably $2, right? So you have $2 to the, look at the GameStop. So it's good I get out of the trade. Wow. Okay, so now for GameStop, all right. But, very volatile, right? So maybe I shouldn't trade meme stocks anymore. Even selling out of the money premium is a problem. Okay. We'll put that as one of the rules, no more GameStop. But, good example. I still think it's a good case study to kind of how you hedge. And the idea is to get out the first 5-10 minutes, right? Because you could continue going higher, or you could have kind of a reverse, especially in meme stocks. All right. Any questions? So Delta Airline, thank you for that question. All right. Any other questions? Exactly my thoughts. Trying to catch the B move. Yeah. So risk versus reward. Okay. I think I would personally give myself a little bit more room, right? So $2, right? So this is your $2 stop loss, right? On a $10,000 account, right? I would not trade more than 12 shares, right? Sorry, $2. Stop loss, $2. So that's what, 100 shares, right? 100, we'll call it 100 shares, dollar cost average. So you can buy 100 shares with $2 loss, right? $200 at risk on a $10,000 account, less than $250. More often than not, there is 50% retracement after such a big sell-off, right? So you would, try to catch 36. Same thing. I would do $2, right? Try to catch $2 to the upside, $2 to the downside. More often than not, it looks like it's doing the bottoming process, so it's a classic setup, right? Kind of one-to-one. But same thing can be said about JP Morgan, right? You can see across all the value stocks, right? Whether it's Deere, Caterpillar, it's the same idea, right? You have wave A, right? Strong wave A, kind of almost in one shot, or A, B, C, right? So you have, or you can say A, B, C, right? Then you have D, usually it gets back to this levels, right? And then you have E. E or C, whatever you want to call this. I don't know if it matters. I'm not a very... But whatever that is, you're trying to catch this wave, right? And same thing, you have well-defined stop level, right? 132, right? Because we did break through December lows, right? So value stocks in general broke through December lows. You're trying to catch wave B and then a pullback. So it's across all the asset classes except high beta, right? High beta is a little bit of an exception. I think the market is overbought. Time to put on. I already have the hedges, so my portfolio is already bearish. I close, half of the QQQ bullish position. I do have spiders, right? Maybe even trim spiders. Half of the position. Let's do that. I don't wanna. I think we're gonna pull back. So let's 398.15. Okay, let's see. What else do I have? Spider? Do I have any other? Manage position. Close half, and the other half I'll close. I think we can get to 407. I think we can get to 407. 407. Okay, 406.60. 406.60. So personally, when we approach into this Fed decision, I try to close position, right? Putting on position, it's like, it's a 50-50 chance. So I do agree that the market is overbought and probably will pull back, but I'm closing bullish position, right? So I closed half of the spider's position, right? I bought it at 398. I thought we were going to have a rally, right? This was before the Fed decision, not Fed, before the regional banks issues. Obviously, my narrative has changed, right? If before regional banks, I did not think, I said I would be surprised to see I said 430, right? I said course scenario 430, I would be surprised if we break above this level, right? That was 2 weeks ago. So now, I would be, 420, I would be surprised if we get to 430, right? But, if we get to 420, I would not be surprised. If we get to 430, August highs, I would be surprised. If we get through January, I would not be surprised, right? Pretty strong rebound you can see in the last 2 weeks, right? So bulls are pushing higher. We already see kind of, Lagarde said, inflation is out of control, right? She says we have not made any progress in Europe on inflation, right? So it's like a shocking statement. She said we're going to continue raising interest rates, right? We're gonna, what else she said? We're gonna fight the inflation. Don't worry about Credit Suisse. It's under control, and everybody believes her, right? The market is up, right? Market is not selling off. So just because market is overbought doesn't mean it's gonna go higher, right? But so I still think that we will have a rally, right? We might have a pullback, most likely pullback, but the headline news is PacWest. Nobody talks about inflation in Europe for whatever reason. Trump, right? We have a Trump indictment. That could cause some kind of, issues. Russia, Ukraine looks like nothing new, nothing exciting. Business as usual. No, it doesn't look like there will be a, ceasefire or anything along those lines. That's about it, right? Nobody actually, I think if you go to Financial Times, then you get, Bundenberg chief says rate setters must be more stubborn in inflation fight. So inflation at the forefront again. PacWest, Credit Suisse, hold issues of risk and debt, right? So debt, this preferred bonds or AT1 bonds, to insure against default, right? They're widening the widening between the rates. So again, the bottom line, it's gonna be very hard it's gonna be harder for banks to lend, right? Tighter financial conditions due to this uncertainty, right? Banks are gonna think twice before they can lend, and they're gonna charge more, right? And that's a ripple effect across the entire economy, right? It might not happen in a week, but in the next few months, in the earning stages, you're going to start seeing this, right? So what else? Carvana is trying to restructure the debt. Nobody cares about Britain. Financial. Ukraine, Russia, commodity profits, First Republic, blah, blah, blah. Okay, I don't know. Nobody cares about inflation in Britain, but okay. But the point is, market is resilient, right? And don't fight the Fed, don't fight the tape, right? So if the tape goes higher and market wants to go higher, then probably we're not going to reach this. I thought we're going to retest this level, right? But so maybe this is kind of the line in the sand, 390. So maybe we pull back to 390, right? 50% retracement, and then retest this downtrend. That's the price action. So to hedge, I'm ineffectively hedging, but I'm decreasing my bullishness in my portfolio, right? I think it's a little bit overdone. Close half of the spiders, close half of QQQ. NFC is flat, so that's bullish. Adding on to bearish trades, I just did that with JP Morgan, or not JP Morgan, XLF. right, in September. So they're all going to move in tandem. So I think it's an individual decision right now. I think if your portfolio is bullish, right, if your portfolio is bullish, then the answer, yes, this is a time to hedge, right? This is not time to add on to your bullish, right? To answer even Bob's question on Delta Airline, right? If overall your portfolio is positive, right, you're bullish, I would not be adding to Delta Airline, right, personally, right? If my portfolio is bullish, right? If my portfolio is bearish, okay, I can try to catch the wave. Makes sense, right? If my portfolio is bullish, I would not add to my bullish position because, I mean, yeah, we can retrace 0.5%, or we can just do something like this, right? You can see United Airlines already came out and said, listen, you know, we have labor cost issues. We're back to regular seasonalities. You know, this pump, you know, this demand due to reopening of COVID is over. You know, it kind of got pushed, right? The demand got pushed to the front. And, you know, that's not good news, right? None of it is good, right? And you can see, you know, a weak rebound so far, right? So, you know, I mean, it could go like this, or it could go like this, right? So if I personally would take the risk only if I was bearish, right? In overall portfolio, and I want to just, you know, decrease my bearishness. If you're on soft landing and you're positive, you know, I would look at your beta, right? If you're trading, if the market is down 1%, and you're down 2%, I would not buy Delta, right? If market is down 1% and you're down 0.5%, okay, maybe, okay, fine, you can buy Delta. So that's my thought process, right? It's not a binary buy or sell. It's buy or sell in the context of your other positions. Carbon Caterpillar, I mean, same as value stocks. Nothing is different, right? Caterpillar, I mean, some stocks better than the others, right? But just in general, when you look at the value stocks, and Caterpillar, to me, looks identical. JP Morgan looks maybe not identical, but very similar. So Caterpillar, I don't think it's gonna set new highs, right? If you believe we're in recession, right? If you believe that the financial issues are not over and these liquidity issues in treasury market and rising rates of borrowing are gonna continue in at least the near future, right, next few quarters, then Caterpillar is not going to set new highs, right? It's going to be a pattern of lower highs. So again, very strong wave A, way overdone, right? Way overdone, feels like a panic, right? I mean, what's the sell-off? So we just dropped, I mean, almost 20%. So Caterpillar dropped 20%, value stocks dropped 7%. So, I mean, Caterpillar is a little bit more volatile, obviously, but the pattern-wise, so all you do is, you know, on Caterpillar, you buy less shares than on VTV. But pattern-wise, it's the same thing. It does look like a good B, right? Then the question is, how far will the B go? Usually, you know, if I'm right and we do have this short-term rally, probably 50% retracement. 50% retracement, and then, you know, is this the bottom? Okay, if you're in soft landing, you think this is the bottom. If you're in hard landing, you think this is just a temporary stop between, you know, A, B, C, right? So short-term, I think B can continue on, right, based on news from Europe and the way market reacts to Europe. I'm going to make a bold assumption that same reaction is going to be the Fed. Fed is going to say raise by 25 basis points. Inflation is still stubbornly high. It's our priority, and, you know, banks are under control. We're going to provide ample liquidity if required, and market's going to like. Maybe a short-term market is not going to like it, but then it's going to bounce back and forth. Then it's going to rally, right, into earnings, right. This is a big unknown, right? People are going to watch this very carefully. So into earnings, maybe the wave B continues for the next couple of weeks. And then after the earnings, especially if the bank's going to say, listen, we're going to start lending less, and the costs, you know, employee costs going up, insurance costs going up, capital costs going up. We have to write off a bunch of debt, or mark down our assets due to the new financial environment. Then market might not like this, right? And you could have that pullback. If they don't say that, then I think it just moves. Instead of sell off in April, May, then okay, it's going to be June, July, but eventually it will catch up. So what do you see as the next catalyst to either up or down? Todd, to me, oil is the same thing, right? Oil looks like caterpillar, right? If it looks different to you, I mean, that's just some divergences happening for a few weeks, but there's nothing, happy or good about XOP, or if you want to look at the oil itself. Let's look at crude oil. I mean, crude oil looks like caterpillar, right? I mean, caterpillar dropped 20%. I mean, oil dropped 20%. Same thing. I think asset classes, in terms of trigger, there's only one trigger right now, right, in the market, and that is 2-year yield, right? That is the only trigger, and it looks like caterpillar, right? It looks like caterpillar, right? So drop, and looks like oil drop, right? Drop. We're talking about don't try to call the bottom, but look for bottoming process, right? It's a classical bottoming process, right? Usually what happens, it's a strong A, you have B, usually classical is 50% retracement, right? Classical 50% retracement, and then wave C, right? Take a little pause, get some earnings news, right? Maybe find some stability. And then in May, people are going to say, do I want to enjoy my vacation and close some of my long positions for the summer, or do I want to just, not go on vacations? Most of the time, people say, no, I'm going on vacation, right? Sell in May, go away, and then you have wave C. So that is a classical setup. This is what I think will happen. This is what happened in 2008, right? Timing is an issue, right? To time it exactly, you cannot, right? At least I cannot. So to time it exactly, you cannot. To see this is the pattern, and now you just need to figure out what's the time delta in these moves, right? Change in time. Well, that you have to look at time series, you have to look at the news, right? So, you can predict that. At least I don't think you can. But, you can predict the pattern, the time between each wave. It could be shorter, it could be longer. It just depends. But that's my answer, for oil, Caterpillar, and Delta Airline. It's the same answer, right? If you think you can outsmart the market because you buy in Delta versus JP Morgan, I mean, that's not my type of trading, right? I kind of top to bottom approach. Some people are more comfortable, so I'm not judging, right? This is a judgment-free zone, right? I'm not judging anyone. I'm just talking out loud. Some people are just comfortable trading JP Morgan, right? Desi has been trading JP Morgan, for 30 years, 20, 50 years. Desi, this is a joke. I don't know how long Desi trades, but I'm going to assume he's just comfortable trading JP Morgan. There's nothing wrong with that. Like, there's a lot of people that only trade, few stocks, and that's probably good. You learn, you understand their behavior, and you're just more comfortable. There's nothing wrong with that. But just to recognize that some of these patterns are highly tied to yield, right? And if you trade in JP Morgan, Caterpillar, and Delta Airline, and they look like 2-year yield, well, maybe it doesn't make sense. I mean, you can still trade those stocks, but in terms of pattern, you look at 2-year yield. And that's where you're going to find the answer in terms of next move in these stocks, right? Obviously, there are exceptions, right? GameStop, right? There are exceptions, not very highly correlated to the move in the 2-year yield, but there are exceptions, right? And there are first time in 2 years they turn positive in earnings, right? A lot of cost cutting, and market rewards that. Not the market, it's the meme stock, the retail Wall Street maven type of traders reward, right? So that's not highly correlated to 2-year. Okay, this is an exception. It's not a rule. Bed Bath & Beyond finally closing stores. Amazing rally in Bitcoin. Yes, Bob, I agree. Forecast toolbox is going down, way down. Stock forecast toolbox way down. What do you mean, Carmen? I mean, first of all, it turning neutral, right? After the rally, it turned neutral for the next 10 days. It doesn't see a lot of momentum, right? It basically says at this point, 390 is where you can expect the market to be on the downside. On the upside, 403, 407. So I completely agree with the stock forecast toolbox. It's a great model, right? Volatility is staying in the same range. I would be surprised for the market to drop below 390, possible, right? It doesn't know what Jerome Powell is going to say. But the Fed announcement aside, let's assume that's already, he's not going to say anything new. He's not going to say anything that the market did not predict. Then, if he sounds a little uncertain, right? If his, his body, his tone is a little bearish, then okay, then we'll revisit 390. If his tone is optimistic, okay, we'll go to 403, right? In a matter of hours or days, right? So both outcomes, I think, plausible. I think it goes to 390 first and then 403. It could be the opposite. It goes to 403, then 390, right? That's just how it's going to be. All right. Bob, all right, KBH and Chewy. Okay. Chewy, I'm a little bit more comfortable. It's not a meme stock, but also very volatile, right? Also very volatile. I'll do it in my personal account at the closing bell, right? Let's wait for I would not do it in front of the FOMC. After FOMC makes sense. So Bob, remind me. Oh, I'm not doing the closing bell. Scott is doing closing bell. But same setup. I would look at the estimated move. As long as I can get 0.5%, in my personal account, I'm going to do it. All right, any other question? All right. Carmen. What's the best way to day trade or options? I personally like, if you want to day trade, and this is probably the most popular trade, is these weekly options or daily options, right? The spiders, the QQQ expire every day, right? You probably don't want to trade them in front of the Fed decision, but after Fed decision, you could look at the range, right? You can do the same trade, right? You can if the market is overbought, you can sell call, right? After the announcement, once the stock price finds some kind of stability, whatever that range is, let's assume it trades in 390 and 402, right? That's the current range. So once after the Fed, you go like this, right? And you find some stability, you say, you know what? I don't think we're going to break 402 or 405. So you sell call or call spreads. You can do Friday expiration, you can do Thursday expiration, right? But half of the volume right now, half of the options volume, literally every other trade are, the most liquid are spiders, QQQ, selling out of the money, right? That's selling call, selling put, selling put here, 390. So that's what I usually do in my personal account. And I've done a couple of examples in my account, in Trading Block. I mean, in a Tradespoon account. We can do more, but you have to like day trading, right? So we can do a trade like that, right? It's the same setup as earnings play, right? The way I did Nike yesterday, it's the same setup, right? I waited till close to the end of the day, and then I sold out of the money premium, right? Right now, you probably don't want to wait till the Fed decision. Some people like to do that. I probably wouldn't. I would wait for the Fed decision, find some stability, and then just have a view on the market. If you don't think we'll break 402, I would sell call as we get close to 402. And if we pull back to 390, I would sell put if we get to 390, right? And again, same thing, look for 0.5% profit, right? If I can get 0.5%, if I'm doing spiders, if I can get 80 cents, okay, then that's what I would do, right? If I can get 0.5% every other day, then that's good, right? But it's the same setup. Penny stocks, I would stay away. They're highly manipulated. Caterpillar, or could be highly manipulated. Caterpillar is going down. Is the market going on? The market is kind of flat, right? It's small, right? It's small. I wouldn't pay attention to too much before 1 p.m. Chicago time, 2 p.m. Eastern. Yes, to use setup bull bear trade before pulse speakers, and whichever it breaks, enter that trade around 230, 35. Kevin does day trading. Every day trader have their own setups, right? That they're popular. That you have to kind of find a lot of this trading psychology. Like for me, I just love doing these earnings trades, right? I do a lot of them, especially in my personal account. Probably GameStop, I'm not going to do it anymore. But Nike, it's a perfect example, right? It didn't go anywhere, right? John sold 110 put or 111 put. I sold 108 put. It's a nice and steady stock. Not nice and steady, it can move 10%, so it's not that steady, but it's not GameStop, right? It's not going to move 50%. So, and you sell the premium, and you just, and you close the trade the next day, right? So something like that, everybody have their own setups, right? Kevin likes to do it before the speech, and then after the speech, what does he do? Speak then, and then trade around 2:30, 2:35 Eastern, right after the speech. I don't like that because there's just too much whipsaws after 1:30, right? Because his announcement is going to come in then the press conference starts at 1:30, and every word is going to get parsed out, right? And there are going to be a lot of volatility till end of today. There will be a lot of volatility Thursday and Friday. So you're at the mercy of how people will interpret his speech. And as these black box machines get calibrated to the new view on the market, you're going to have these whipsaws, especially now, right? Especially now because, of the financial crisis. He has to address inflation, and he has to address liquidity or lack of liquidity, right? So each of those topics, as he addresses, market is going to move, and it's going to move a lot, right? And we've seen these outsized move in the yield, right? This is not normal market, right? None of this is normal, right? This is a sign of distress, right? Sign that something is wrong. right? And for that reason, you're going to have these large moves going to continue. They're going to continue. Let's see, 2008. What happened to 2008? How 2-year yield? How volatile was it after April? So yield actually rallied, right? Into summer, I mean, it moved 50%. That's crazy, right? We went from 2 to 3%. So it just shows you that this is not a normal, right? You know, in 2 months or 3 months, yield should not go from 2 to 3 and then from 3 to 2, right? Same thing, right? You know, 3.5, we might jump to 4.5 and then 3.5, right? So it could be the same setup in yield. That means market is going to be volatile, and you're going to have a lot of these whipsaws. So, I mean, if you're bullish and bearish at the same time, then it's fine. How far money do I sell? I usually look for 0.5%. So if it's a $400 stock or ETF like spiders, I would look for 80 cents. Usually it's delta 30, around delta 30. So if you look at the delta 0.3, right? Your short put or your short call, and you do a spread. And I personally look for 80 cents, 20 basis points, right? 20 basis points. Carmen, no problem. Don't now explain it better, will slow down. Oh, 6 months. Yes. So 6 months Caterpillar. It does show negative trend, right? And VTV, I assume also. Let's see. VTV is less, right? So it sold off less. So VTV is outperforming Caterpillar. So on value stocks model, I mean, it shows, it's actually, at least for now, it shows stability, right, in value stocks. So it was, wait, sorry, 6 months. 4% down, let's see. Yeah, value stocks, it actually sees, it doesn't see a breakdown, right? It actually sees that the value has reached the bottom. Granted, it was done on March 1st, right? So model did not know about, did not take into consideration regional banks, right? So when did this whole thing happen? First week of March, right? So last week of February, model was basically neutral, basically saying we're not going anywhere. But with the regional banks, we're not taking into consideration all this change. So, you know, on April 1st, it will rerun, it has another complete data point, and this vector is going to be a lot more negative, right? Caterpillar, it actually found, it since Caterpillar pullback started prior to March 1st, right? So Caterpillar, you know, the pullback already started, so it turned more negative, right? Because you had a pretty, you know, we went from 260 to 230, right? So 10% drop. So because of this 10% drop, model already saw that there'll be a continuation. It was right. First 5 minutes of Paul's speech. Kevin, or we'll see if Paul will pivot. Corner strategy, Goldilocks. Yeah, I agree. Paul's job is not the most appealing right now. I probably would not want to do it. But well, I mean, he's been doing this for many years, and I think he'll do a good job. All right. 9:15. Okay. So all eyes are on Fed, right? Fed 2 p.m. right? Eastern, 1 p.m. Central. I would not add 2 positions. I would rebalance. I think you want to go either market neutral or slightly bearish into this announcement. That's my personal opinion. But I think there may be a little bit more room to go higher in the next few weeks. Okay. That's all I have for today. Thank you very much. Any questions? Bob, yes. See you tomorrow. Thank you, and have a great day. Oh, YouTube, right? Please don't forget, spread the word. If you see the content is useful, thank you for watching YouTube. We actually streaming live. If you are streaming live, or if you're watching the recording and you haven't subscribed, please do me a favor, click on subscribe. You'll get daily updates on market conditions, different trade ideas, content similar to today, and that will help you hopefully navigate the current market volatility, and also help you help other subscribers trade in current market environment. Thank you very much, and have a great day. Phil, thank you. Thank you for your kind words. Todd, thank you. Yes, 2 p.m. Eastern, 2:30 Paul speaks. Right, so all eyes, 2 p.m. Eastern, 1 p.m. Central. Thank you, Kevin. Anyone else? All right, guys. Thank you. Take care.